Good morning. It's March 15th. I'm sure that you're all watching this wild ride that we're on in the markets today. Credit Suisse is down to hit another all-time low for a second day after the Saudi National Bank, which you probably know is its biggest backer, said it couldn't provide additional financial support because of regulatory restrictions. If you remember, it was like 9.9% that they had gotten earlier this year, so they can't go over 10%. So a number of other Eurozone banks are declining in sympathy. The U.S. markets are down in sympathy with, financial institutions here, even the good high quality ones down. So, when you're having bellwethers get hit, this is the time that you want to say, okay, what do I do to my portfolio? This is not the day to freak out, but it is the day to risk manage, as is every day. So I'm going to head over to the Longbow platform and we'll walk through where some of the key ETFs are today. So you'll see it's a pretty similar setup to yesterday that I gave you. But what I'm going to show today is I did move out a few names, added other ones, and have obviously the VIX at the top. Here we're at VIX. We're heading towards the top end of its range. Let's just take a quick look at that here. You can see the volatility has really just exploded. So while, we're here heading up, it still could be a ways to go. The bottom, though, is just kind of bouncing along. So what it's saying is the risks has really opened up. But we're not at the top of the range, so take note of that. The SPY in the middle of the range, Q's middle of the range. You've got oversold on XLE. They're talking about there's extra Russian supply. That's part of the news here. But it is in a bearish formation. Remember last year, this was like the one sector that was winning internationally. But right now what we've got is bearish short-term, bearish medium-term signal on it. So when it's oversold, unless you really have a view on supply and demand and that being able to move these figures here to a neutral at least, if not bullish, you don't go and you're not buying it at that time. XLF, you're hugging that bottom end of the range again today. So you can kind of take that as you've got bearish short-term, bearish medium-term. Even though it's at a premium, there's a reason why. When you've got potential contagion here into other banks and concerns about the global banking industry. So again, this isn't one where it's below that you necessarily buy unless you're looking for a trade. You think everything is going to get shored up, but you have to know the fundamentals and the macro, not just the technical on something like XLF, which is the financial ETF. For the dollar, we're middling range here. So, it's got that bullish medium term, but as we saw, it depreciated since the fall. But it has bounced a little bit back up. It's been moving around lately with the big swings in the days, but it's in the middle of its range, so nothing to do. But you'll see here makes a lot of sense, right? So people are now saying, okay, did the Fed and other central banks, call it break the banks? And like we're seeing with CS, as we saw with SVB, Signature, lots of these. Are we going to have a situation where the Fed's going to ease off, not hike as much? That's what people are pricing in today. 100 bips, they're going to have to come off. And what you see there, it means that the short end, so call it the 2-year, this is the 1 to 3 year, the SHY ETF. But what you have then is when yields come down, those securities go up and you're hitting that overbought signal. But we have a neutral on the short term, neutral on the medium term. It's also no surprise. So if you're thinking rates are coming down, what happens to the long duration bond? It's sitting near the top end of its trading range. But I'm going to click into SHY here because I think that's probably the more interesting one today. And here we go. So looks like the VIX, doesn't it? So what you've got is that, we're saying, okay, they're going to have to hike. They're going to have to hike. Oh, no, not going to hike. So you have it just really going through the roof and that boundary being expanded. So it's super wide right now. But that also gets to the fact that there's some people betting on the opposite side. So there's people thinking that they're going to hike, people thinking they're not going to hike. But what we believe for March, this is more of like our house view, if you're looking to know that, is that inflation's too hot, labor's too hot. And so it's going to be really hard for central banks, including the Fed, not to hike. So we're going to be seeing the Eurozone hike. We're going to see the Fed hike. We're probably going to be looking into a 25 bip hike, obviously not a 50 bip with all that's going on, but it's going to be hard for them to keep a straight face and not do anything near term because you're seeing these readings coming in strong. We also saw retail sales being extremely strong. And so again, when labor is strong, you've got inflation still sticky, you've got people spending, it's going to be hard for the central bank to say, we can't raise rates more. That's really important to note. So if you're betting on that, I'd reconsider that bet and think about it, because I think what you'll see here is they're going to have to act. Maybe not as much as people were worried about a few weeks ago, but they're going to have to act. And so you want to be careful if you're betting, especially long duration across the world, on that fact. That's it for today, and I look to see you tomorrow.